Good evening. I'm Laura Lafayette. I serve as the CEO of the Richmond Association of Realtors. We serve over 4,000 realtors who live and work in the Richmond metropolitan area. As part of that work, I serve as the executive director of the Partnership for Housing Affordability. The partnership has been around since 2004. It's a very simple goal, that is to ensure that an adequate supply of affordable housing is a public policy priority in the Richmond metropolitan region. Our footprint mirrors the footprint of the Planning District Commission. A few years ago, we took the step of being really true to our words of partnership. The board of the partnership consists of the private sector, the nonprofit housing sector, and the public sector. And a few years ago, I came out and I kind of asked Charles, I would say I begged, but I asked if we could have someone from Ashland serve on the board. And Charles and you all were gracious enough to loan us Nora. And she is a fantastic member of the partnership board. She's smart and she cares deeply. And I have learned a lot with Nora on the partnership board. So very quickly, 2 years ago, the Capital Region Collaborative came to the partnership and said, we would like to see a study of the region's housing needs. And so smart people know what they don't know, and I don't know how smart we are, but we knew we couldn't do that alone, so we engaged Virginia Tech and VCU. Virginia Tech did a gap analysis. What are people in the region paying for housing versus what they can afford? And then VCU led us through a series of interviews with stakeholders. We did a workshop to talk about the solutions to the challenge. And that gives you an idea of what we did. So in this report, and I, of course, walked out of my office today without the copies of the report, but we will get those to you if you've not had a chance to see it already. We talk a lot about what cost burden. So you're considered cost burden if you're spending more than 30% of your gross monthly income on housing. I don't know about you, but the IRS doesn't let me live on my gross. So I always tell people that I think the numbers are underrepresented. And then if you're spending more than 50% of your income on housing, you are severely cost burdened. I think you all probably know these numbers. This gives you a sense of the income that in the region, so $72,900 if you're at 100% of AMI. Obviously, we have thousands upon thousands of households that are not close to that. No surprise, particularly if you live in my world of real estate, there's no surprise really as to one of the large culprits of our housing affordability challenge. Even during the recession, when housing costs went down some, that didn't compare to the stagnant wages. So we have stagnant or wages going down and housing costs going up, and it creates a gap. This is a reflection of the region's total housing deficit. So if you're looking at, I'm looking left to right, you're looking left to right too, aren't you? So if you're looking left to right, obviously the less you earn, the more likely you are to be cost burdened in terms of housing. But what I always like to point out with this slide is, even if you very comfortably make your rent or your mortgage, this should be a great concern to you, because $862 million is what we would need to do on an annual basis as a region. We'd have to stroke that check every single year to close the gap between what people are paying for housing and what they can afford. So that's $862 million that folks are not saving for retirement. They're not saving for their kids' college. They are not. They're not taking health insurance. They're not taking life insurance. And for the region's economy, it means they're not spending money on clothes. They're not spending money on as much money on food. They're not spending money on electronics. They're not going out to dinner. All that discretionary income that makes our economy tick, that way too much of income is locked up in housing. That's the challenge we have as a region. So over 130,000 households have some kind of cost burden. Of those, over 55,000 are severely cost burdened. Oftentimes, I think, and certainly in the past, I think a lot of people wanted to act as if affordable housing was a challenge for the city of Richmond and nobody else. That's just not the case. In every jurisdiction, there are households that are challenged to meet their housing needs. Now, it looks very different. You know, I came in, I knew you were going to have a conversation about what do we do with folks living in hotels. There's no one who would suggest that that's that's not the solution. So what are the solutions? That's not how people would choose to live if they had other viable choices. There's no question about that. So that's your challenge. In Chesterfield County and in the city, and in some parts of the city of Richmond, there are trailer parks that are in just horrible conditions, and everyone admits that. So, and then the challenge in Charles City and in Goochland, Powhatan is going to look a little different. But the point is, everybody's in this boat together. Just to give you an idea of where Ashland stands, and I'm probably going to refer to my notes a little bit here. Very specifically, if you look at your number of households, households as far as homeowners and renters. I mean, the good news is if you look at the number of owner-occupied housing, that's a better number than a number of the jurisdictions in the region. You've got a significant number of renter households that are cost burdened, and I would have to go back to tech before you ask the question and know whether or not some of that may be that college students have been captured in your census data there. That's just a possibility. I don't know that, but I can go back and check on that. So again, this is just another way of looking at your housing cost burden. Let's see here. So of the number of households, and then again, when you look at the breakdown of the percentage of AMI and then who is challenged, and obviously, not surprisingly, those folks making less than 30% of AMI are going to make up, and then less than 50% of AMI are going to make up the bulk of the folks that are challenged in your region. Now this isn't. Now I'm looking back at the regional snapshot, not Ashland. And here's what I think is interesting. I think also there is this presumption that renters are the ones who are burdened. And in our region, we have an awful lot of owners who own their home, but they are struggling with their mortgage for one reason or another. Again, this is I'm sorry, that last shot was Ashland. Just a small breakdown. And this is what the region looks like. It's almost a 50-50 in the region. This is another slide that I think sometimes surprises people, that when you're looking at folks that are burdened, many of them are adults living alone, obviously one income, so they have to meet their needs in one income. But here's where I think this becomes a big challenge for our region. When we're looking at cost-burdened households, look at the number of seniors. A full 40% of households that are cost-burdened are over the age of 60. Now, what I say about that is if you're under 29 and you're cost-burdened, that's likely to be a temporary situation. You know, when my daughter graduates from the University of Richmond, the only way she's not going to be cost-burdened is if she comes home to live with me. So I'm going to be okay if she's challenged for a few years. But because that should be a temporary situation, you know, when you get into your 30s, 40s, 50s, you're in your prime earning years. But when you're at 75, and if you're cost burdened, that's likely to be a permanent situation. So I think a challenge that most of the jurisdictions have is that their senior populations are growing, and we know that the seniors are going to struggle with their housing. And I think it raises issues about, do we want seniors to age in place? If seniors age in place, what does that mean to our older neighborhoods? And if we want to give them options so they don't have to age in place and they don't have to necessarily be isolated, then what kind of housing and amenities do we need to build for seniors in our communities? Just to give you a finer point on this, we could not, for this particular statistic, break out Ashland, but if you look at Hanover, so I've got two population scenarios, A and B. If you look at Hanover, you can see that Hanover is going to in both scenarios have over 9,000 households, growth of over 9,000 households in the 65 and older category. Interestingly enough, the city of Richmond is not seeing the kind of growth that the suburban jurisdictions, Hanover, Henrico, Chesterfield, are seeing. So scenario B, just another different way of looking at it, but it's still, again, over 9,500 households in the senior population. So very quickly I'll shift. That's kind of the challenge. That's the data. Then we engaged a number of stakeholders and asked them, okay, that's the problem. What's the solution? Just to give you an indication, we asked a lot of different folks. We didn't load this up with a bunch of developers. You will see a line in there about cash proffers, boo-hoo. But we didn't overrepresent the development community. In fact, local government is probably the highest sector that was represented in our conversations. Not surprisingly, why do we have an affordability gap in the region? Well, the economy and income. So we looked at two different types of solutions, demand-side solutions, supply-side. Demand-side solutions are, how do we help people perhaps earn more income so they can afford more housing? And I want to be really clear, this is not a report that says this is local government's fault and local government is the sole solution, because this isn't local government's fault and you're not the sole solution. And quite frankly, this report makes it very clear that we cannot grow our way out of this problem, in that we cannot put enough inventory on the ground to solve this. Half of this has got to be about preparing folks for jobs that pay more. I happened to be with Chesterfield Economic Development staff yesterday, and we spent the bulk of our time talking about how are we going to do a better job of aligning our career and technical education at the secondary level with the employers in the region. And I'm excited about the potential that Hanover has with a perhaps beginning of a regional career and technical education facility. But again, if you look at this, how do we help people earn more deposit assistance, down payment assistance? There was some talk about the minimum wage, but I'm not going to get into that. Again, I think the answer is a job is a solution to a lot of different problems, a good paying job. On the supply side, okay, how do we create more affordable housing inventory? Dedicated local funding source for affordable housing in the city of Richmond. They have an affordable housing trust fund. It's the only jurisdiction that has that. We are really working hard on identifying a dedicated source. There are, I think, 48 of the 50 states have affordable housing trust funds and local trust funds. If you don't have a dedicated source of revenue, trust funds don't do you much good. Greater integration of uses. In a town like Ashland, you see that, but that's not a natural necessarily in other jurisdictions. So putting commercial and retail and residential mixed use is a way to create affordable housing in a very non-threatening manner. You know, the NIMBYs or the cavemen, Citizens Against Virtually Everything, they don't necessarily come out if we're talking about mixed-use development. It's a very natural way to have the apartment over the coffee shop, next to the bungalow, next to the townhome. Where it's right, we need to think about increasing density. Not out in the middle of nowhere where there isn't any infrastructure, but there are nodes in our region where we need to see greater density. Again, we did have the development community in the room, so of course we had the eliminate or reduce proffers suggestion. So here's just a few more. We need to get the corporate sector engaged. Are there programs that they can do? We also need to draw down all of our federal dollars. I know federal dollars are shrinking, but it's incumbent upon the nonprofit community and the public sector to work together to make sure that our representatives understand that we need to draw down all the money that we are entitled to as a region. We are talking about a community land trust. I hope before the year is out that we will have a land trust established. I think initially it will operate in the city of Richmond. There will be legislation in the 2016 session, also in the General Assembly session, to enable local governments, if they so choose, to create land banks. I think that's an important potential tool. And, you know, there's some other potential zoning tools that we can put in the toolbox. You don't eliminate an $862 million deficit overnight. You don't take 130,000 households that are cost burden and eliminate that burden overnight. But with incremental change, we can see progress. Our goal from the partnerships perspective is to work with the local governing bodies, come to you and say, and I think we'll come to folks in January when all the elections have sorted themselves out, and sit down and say, what are your pressing challenges? What can we do to be assistance? And that's going to look different in Ashland and than it is in Chesterfield. But we're lining up to have those conversations. We're not going to come in here and say one size fits all. We really want to come in with a very open attitude of saying, you tell us how we can best meet your needs. That's what a partnership does. So thank you for your time. I'm happy to answer any questions, but I know that you have other business before you.
Thank you. Questions? Comments?
A question and a comment, if it's okay. The comment is, I've been working with Laura Lafayette for close to 14 years now, and I am greatly appreciative that she has, in large regional conversations, managed to separate Ashland out largely from Hanover in ways that we just didn't see 14 years ago, and that has given us much better numbers to work with and much better information, and we really appreciate that. My question's about mixed use. I was out in Short Pump on Friday, and what I think I noticed is that while those dwelling units are filling up, the retail stuff does not seem to be. And in fact, some things like the Children's Museum have moved out of the retail spaces, moved over to the mall. And we've been putting a lot of our eggs in the mixed use basket for some time, but sometimes I don't see those retail uses filling up very quickly. Is that just a missed observation on my part, or is that a trend maybe?
I think that depends probably more on just kind of the commercial market. Is there less expensive rent and closer proximity? The Children's Museum may have misread the tea leaves as far as the demographics out there.
Right.
You know, we've seen a restaurant in that particular development that has gone, by the way, and I don't think that's been released. And if you look at what's coming west of Short Pump, there's an awful lot of retail that's coming.
Right.
But then on the other hand, there are apartments just coming out of the ground like mushrooms. Right. What I like about mixed use is it gives us a chance to have economically integrated communities. So there are an opportunity for someone to rent, someone to have perhaps a townhome, and someone perhaps to have a single family detached, and also to be less auto dependent. So I think we're going to continue to see mixed use be attractive, because what I say is, you know, the empty nesters, whether you haven't populated the nest with birdies yet or your birdies have flown, both of those demographics want the same thing. So I think we're going to continue to see it, but you're always going to see kind of, I think, some commercial come and go.
Okay. Thank you for all that you've done for us.
Well, I should say that Faye has been my coach in many regards, especially on can we have some data that looks like Ashland? Yes. But I would never show up and know that you're going to be present without having a little bit of Ashland data.
Other questions, comments?
There was a recent seminar there at U of R on housing. I believe you were likely there as well.
In March, when we released the study, yes.
Right, and it seemed like there was some consideration that if some higher cost housing at a certain level existed, that there'd actually be an upward flow.
Right.
They would free up more homes at the next tier down.
Right.
And I thought that was kind of interesting, and that if you look at Ashland, our housing demographics suggests that we actually, we would need more, statistically, we need more upper cost housing
right.
than lower cost housing. And so I just wanted to say that if different jurisdictions have different needs specific to that jurisdiction, but that doesn't necessarily mean that we don't have a concern for affordable housing.
Right.
As you say, that observation at that presentation kind of suggested that there's different ways to get there that might be counterintuitive, that sort of thing. And so I thought that was very interesting. But it seems like affordable housing is almost a byword, way too much of a byword that's used the same way that world peace is at beauty pageants.
Right. I mean, who's going to say they don't want affordable housing? The question is, where do you want it? And what does it mean? I mean, that's in the affordable housing is, well, it may be affordable to whom, right?
Right.
I took that slide out of my presentation, but it's going to become awfully hard for me to explain it. But basically what we're talking about is that...
I'm sorry to bring it up.
No. It's fine. I mean, you are an erudite group. We'll get it. So it's simply the case that we're not going to go out and build 30,000 units of 0 to 30% of AMI housing. We're just not going to do it as a region. Not overnight anyway. And quite frankly, we all know that you can't cluster that kind of housing. That creates other challenges. What the study said was if you were very intentional and if you built more workforce housing affordable to people at 80 to 120% of AMI, and you scattered it throughout the region, there are people that right now are sitting in a house and they could afford to buy a lot more house, right? They just choose not to for various reasons. My argument would be something like, whatever the most attractive school district is, if you put workforce housing there, some people that are sitting over here who can afford a little bit more, they're going to go stretch, perhaps, because you may be giving them some inducement. And then when the people that are making 150% of AMI but are sitting in a house that somebody at 80% of AMI can afford, when they move up, that frees up a space for the household that can only afford that 80%. So what we have in the region is a mismatch between what people can afford and where they're living. And I'm not here to suggest that people need to stretch themselves. Sure. But that would be the dynamic that the academics at Tech observe, which is probably a case, elsewhere, everywhere. We know we need to build more workforce housing. I just don't want the affordable to get lost in the mix.
Very good. Thank you.
Thank you.